I believe you guys can hear me. Can you hear me? Can you hear me? I'd like to see your comments. Good evening, good evening. Thanks for joining. Thanks for joining. How is the sound? Can you hear me? Can you hear me? Am I audible? It's very important that you guys hear me clearly. Am I audible? Thanks for joining. Thanks for joining. Sure you had a great weekend. I want to believe you all can hear me. If there's anything you want us to look at together, please drop it in the comment section. If there's anything you want us to look at together, drop it in the comment section. If you have any question, drop it in the comment section. How was your weekend? How was trading this past week? I hope it was profitable. I hope it was profitable. Can you all see my screen? Can you see my screen? Can you see my screen? All right. I can see your messages now. Okay. All right. I believe you all can see my screen now. You all are welcome to tonight's weekly market outlook session. You're welcome. You're welcome. I'm so excited to be you guys in tonight's session. For those of you in the mastermind group, I sent you a link to join the class. If you want to come on live, please you should use the link I sent to you. If you want to come on live, okay. If you want to ask questions, for those of you in the mastermind group, I sent you a link to join the live streaming. So if you want to come on live, you can just use that link on your video and you'll be able to ask questions. Okay? You're welcome, you're welcome, you're welcome. I'm really appreciating you guys for always showing up. So if you have any question, if there's anything you want us to analyze together, look at together. Good evening, Mr. Abraham. Appreciate you, Mr. Okoro. Good evening. Thanks for joining. If you have any question, anything you want us to look at together, please drop it in the comments section. Okay, so we'll start today's session by looking at GbpUsd. GbpUsd. Let's see. As you know, we'll start with the weekly time frame. It's very important that you know the trend for the week. Okay, before you move down to the lower time frames, you need to know the trend for the week. You need to know the direction for the week. It's very important, and that is the purpose for this class. Okay, I come here every weekend to share my thoughts, my expectations with you guys for the week. Okay, so let's start with GbpUsd. Let's start with the weekly time frame. Let's start with the weekly time frame. Okay, the weekly time frame, as you can see, it is obvious. As you can see, it is obvious that GbpUsd is bearish. You can see last week candle closed strongly bearish, right? You can see that last week candle closed strongly bearish. So what we have on the weekly time frame, it indicates that the bears are still in control, right? It indicates that the bears are still in control. Now, the question you need to ask yourself is the right time? Would the current market price be the right or good price to sell? That's the next question you need to ask. You know that the trend has been bearish for some time. Now the question now will be, would it be right to buy, to sell at the current market price? Would it be right to sell at the current market price? Is the current market price a good price to execute a sell trade? Now, if you look at the chart, Euro GbpUsd has been selling after the formation of this engulfing pattern. This would have been a good using the weekly time frame. This would have been a good entry for GbpUsd sell. Now, if you go down to lower time, let's go down to daily. Let's go down to daily. After the formation of this is a spinning top, a bullish spinning top. Now, after the formation of a spinning top, you are expected to wait for the next candle to close bearish before you sell. So let's go down to daily. Instead of waiting for this weekly, candle to close before it's putting a sell. You would have gotten a better entry on daily time frame. Let's go to daily. So you can see on daily here, we had this is a shooting star. This is a shooting star, and the market had formed a resistance level. You can see this is a strong resistance level. Now a shooting star formed after this resistance level was created. This push up was to clear liquidity reset at this resistance. That's based for this push up. And after they cleared the liquidity reset at this high, what happened? A shooting star candle formed, indicating change in trend. So if you're trading with the daily time frame, I believe you guys can hear me. If you're trading with the daily time frame, this would have been your entry on the daily time frame. This would have been the sell on the daily time frame. This would have been the sell on the weekly time frame. So these are the best entry levels for GbpUsd sell. Now the market is trading far below these levels. So you would agree with me that if you decide to sell from the current market price, you would be taking a very high risk. You would be taking a very high risk, right? You would be taking a very high risk. If you had expected sell from this point, your stop loss would have been at this point, let's say 152 pips. At least if you're losing the trade is 152 pips and you go for 300 pips, it's not bad. So if you had gone for 300 pips, you would have taken your profit at this point. You can see at this point, 372 pips. You would have taken your profit 1/2 around this area. You can see. So you would have taken your profit here. If you had entered at this point, let's see the risk. The risk here is higher. If you had entered sell at this point, this is where it's stop loss 315 pips. Let's say you're risking 315 pips for, let's say 500 pips. 500 pips. If you are a day trader, you cannot be taking a risk more than 50 pips. 350 pips. That's for swing traders, not for day traders. Okay, so these are the entry. These are the best where you would have entered sell in the GbpUsd. So entering a sell now, you can see the market has gone over close to 800 pips or more than that from this point. Okay, that's about close to 700 pips from this point. So if you are entering a sell from this current market price, you will be taking a very high risk. Are you with me? So there is a high probability that price is going to pull back. There is a high probability that price will pull back. If you're selling, you should wait for price to pull back before you sell. Are you with me? You should wait for price to pull back before you sell. Can you guys see me? Can you guys see me? Can you see me? Can you see me? I want to see your comments. Can you hear me? Can you see me? Can you hear me? Can you hear me? Can you hear me? Okay, so there's a high probability that price will pull back. If you're considering selling, you should look for price to pull back to a premium area before you sell. Okay, you should wait for price to pull back to a premium area before you sell. Okay, so it could also be that this drop, this bearish move, this bearish trend has been on for some time now. It could be that you just want to clear the liquidity inside at this previous low. Okay, this is the area of liquidity, and also this is an area of liquidity. And we had a fair value gap here too. You can see that could also be the reason for the pullback. You can see here we had a fair value gap. I think that gap has been filled. Can you see this fair value gap? Can you see this fair value gap here? This is the gap in between the high of this candle and the low of this candle. They tried filling the gap here, it was not filled entirely. You can see maybe here, you can see. Price tested that gap, but it wasn't filled. But at this point now, this fair value gap has been filled. So it's possible price will pull back from this area. So what do you look out for? You look out for a bullish reversal pattern to form. Wait for a bullish reversal pattern to form. Maybe it could be a spinning bottom, it could be armor, it could be an inverted armor, it could be an engulfing pattern. That is what you should look out for before you buy. As you can see, last Friday candle closed bearish, which indicates that the bears are still in control. It indicates that the bears are still in control. So you need to wait for a bullish candle to form after this bearish candle before you buy. Are you getting me? You can't jump in and buy. candles we're seeing on the chart now are bearish candles. Right? So you cannot jump in and buy. So you need to wait for a bullish reversal pattern to form before you buy. So what's my bias for GbpUsd this week? I'm considering buying GbpUsd this week. I'm considering buying GbpUsd, but a bullish reversal pattern must form before I buy. A bullish reversal pattern must form before I buy. So it's likely tomorrow I wouldn't be trading. I wouldn't be trading tomorrow. I'll have to wait for tomorrow's daily candle to close if I would execute a trade on GbpUsd. I would need to wait for tomorrow candle to close before I would execute a buy trade on GbpUsd. Now I want us to look at the calendar. Okay? I want us to look at the calendar. You know the days that major news will be released. It's very important that as a technical trader, you must be aware the days major news is expected. Because most times it's the day that the major news will be released. That is when the markets will be volatile. And you want to execute your trade the days that the money will be in the market, there will be liquidity, the market will be volatile. Those are the days you want to execute your trade. And most of the time, it is when a major news is expected, that is when the market is very volatile. So it's very important that you check the calendar. Okay, you check the calendar. Most times you notice that you execute a trade, you have a good technical setup, and the market goes against you. The reason could be that the major news was released. That was why the market went against you. If you were aware that major news expected, you would have waited for that news to be released before you executed the trade. Are you getting me? Or probably you would have gone in a conservative. You would have gone all in. Are you getting what I'm saying? So it's very important that you are aware of the days that major news will be released. So let's think to 23rd. Okay, so let's check the calendar. Very important. If you have any question, okay, Euro USD. Mr. Elijah said we should look at Euro USD. Okay, look at Euro USD in a few minutes. So Monday, Bank of Japan governor, UEDA speaks. Okay, there's no data to work with. Okay, then on Tuesday we have policy reports hearings from Great Britain. Then we have Canadian dollar CPI will be released on Tuesday. No major news for the dollar. Okay, no major news for the dollar. And since a major news will be released for Canadian dollar, you might want to consider trading USD CAD. So on Tuesday, most Canadian dollar pair will be volatile on Tuesday by 2:30. So you might want to consider trading CAD pairs on Tuesday. Okay, so they've given us the previous value and the forecast value. What we're waiting for is the actual value. That is what we're going to trade. The actual value is what we are interested in. That's what we're going to trade. The forecast is 0.3. The previous is negative 0.4. So they're expecting an increase. That's an increase from negative to positive. That's their expectation. So the actual is higher than the forecast. It will be good for Canada. The actual is less than the forecast, which is negative for the Canadian dollar. So you know the type of order you execute when it is negative for Canadian dollar and when it is positive for Canadian dollar. I believe you know the type of order to execute. I believe, right? So that is it for CAD on Tuesday. Then on Wednesday, no major news for dollar. So we're only expecting CPI. Wednesday, 8 a.m. Nigerian time. So you might consider trading USD on Wednesday because of this 8 a.m. Nigerian time. Consider GbpUsd or other GBP pairs. Okay. And on Thursday, the first news for the dollar will be released on Thursday. That's unemployment claims. It will be released on Thursday. What's the expectation? The previous is 217 and the forecast is 220. So they are expecting an increase. Okay. So then on Friday, so we just have major news for the dollar. There isn't much major news for the dollar this week, I guess. Yes, okay. Then on Friday, flash manufacturing PMI, flash services PMI. So I think I'll be considering trading. My first trade on the USD pairs will be on Wednesday or Tuesday New York session. That's my first trade on USD pairs will be on Tuesday New York session or Wednesday. That's when I'll be trading the USD pairs. Okay, so let's go back to the chart. Do you have any question on fundamentals before we go back to technicals? Any question? Any question? Any question? Any question? Any question? Let me know in the comment section if you have any questions. So let's go back to the chart. Okay, so that's my tip on GbpUsd. I hope that is clear. Any question on GbpUsd? Let's move to the next page. Someone said we should look at Euro USD. Okay. So we'll start with the weekly. As you know, Euro USD and GbpUsD are positively correlated. So if I'm looking for buy opportunity on GbpUsD this week, then you should expect the same on Euro USD. My bias on Euro USD would also be bullish. Okay. So what do we have on Euro USD? As you can see, can you see my screen? Can you see my screen? I hope you can see my screen. So on Euro USD, you can see last week was strongly bearish. It was strongly bearish. Okay, it was strongly bearish, and you can see here we had a support here. See this is a support. You go back here also. So price is currently sitting at a support level. And you see that price is currently sitting at a support level. Can you see that? It's currently sitting at a support level. So it's possible price will pull back from this support level. So how do you know this support will hold? How do you know that this support will hold? You have to look for a bullish pattern to form. When you identify support level, resistance level, when price hits that support resistance level, for you to be sure, okay, that price is that support or resistance is going to hold, you need to ensure that a bullish reversal pattern forms at that area, at that zone. Are you getting me? When a bullish reversal pattern forms at this support, as you can see, the price at this level right now, but the pattern that has formed on the weekly time frame is not a bullish reversal pattern. This is just a bearish candle, not a bullish reversal pattern. If this candle are closed as an hammer or a declining top, then that will be a confirmation to buy Euro USD. But as you can see, what we have here is just a strong bearish candle, not a bullish reversal pattern. But let's go back to daily and see the pattern we have on daily time frame. So you can see what we have on daily time frame. This looks like a bullish reversal pattern, but not a valid bullish reversal pattern. Now, before the close of the market on, okay, sorry, it's just updated now. The daily just updated. So you can see what we had on the daily time frame. You can see what we had on the daily time frame. This is an inverted hammer, or you could call this, you can't call this a bridge because it has a small body. It has a small body. So this is an inverted hammer, which indicates change in trend from bearish to bullish. From bearish to bullish. Now, a lot of retail traders would have executed a buy trade. Many retail traders would have executed a buy trade. The impatient traders would have executed a buy trade. So where would they have their stop loss? Their stop loss would be residing at this low. Their stop loss would be residing at this low. So there's a high probability the man will come and do liquidity residing at this low before going bullish. So if you want to buy EU this week, this is what you should look out for. Okay, so this is for our time frame. You can see before the close of the market on Friday, you can see price was in the range. You can see it was in the range. Price was in the range. Had an high here. We also had a low here. So if you are considering buying, ensure that 4-hour candle closes above this resistance. Ensure that 4-hour candle closes above this resistance if you are considering buying Euro USD this week. 4-hour candle does not close above this resistance. I don't think it will be right to buy Euro USD. Wait for price to break this resistance. Wait for price to break this resistance zone. Okay, I would have said if price breaks this support, you should sell. I would have said if price breaks this support area, you should sell. Like I said, my bias is bullish, so I'm not interested in selling Euro USD. Why should I sell Euro USD at the current market price? This is where price started. This is what should have entered. I had a shooting star here. I had a spinning top here. So this would have been the best entry for Euro USD. You should know when price has gone far from the level you want to have entered. And when price has moved 50-60 pips from the level you want to enter the trade, let it go. Let it go, or wait for price to go back to that level where you're supposed to have entered the trade before you execute the trade. Don't jump in because of FOMO, fear of missing out. No. Once you open your chart and you see that the market has gone far, let's say 60-70 pips from the level you want to have entered the trade, you wait for price to pull back to that level. If it does not pull back to that level, at least it should pull back at least 50% retracement at least before you join the trade. Okay, before you join the trade. So this would have been the best entry sell on Euro USD. And if I had missed this opportunity, there was another opportunity, this retracement. After this retracement, we had another opportunity to sell. Okay, see, so this would have been the best price. This would have been another opportunity to sell. So if you didn't sell from this point, you didn't sell from this point, why would you want to sell from this point? Euro USD has already sold, let's see how many pips from this point. This is above, this is close to 650 pips, 650 pips. So why would you want to sell from this point to get price? As far as I'm concerned, the Euro USD is at oversold. Is oversold level. Is oversold. If you apply, what's the name of this indicator? RSI. Let's apply RSI or stochastic. Let's use stochastic. You can see if you apply stochastic, you can see this is daily. You can see that the stochastic is below level 20, which indicates oversold. It's oversold. So this will be the right time to sell Euro USD. There's a high probability that price is going to pull back from this area. Okay, so personally, I would wait for price to close above the resistance level. You can see 4 hour also has crossed this level. It has crossed this level. You can see. So what we need on the chart is confirmation to ensure. We need to ensure, because as you can see, the line is currently in between. This is like an equilibrium area. You can see price has been in a range. This is an equilibrium area. This indicates that price has been consolidating for some time. So before we jump in, since 4 hour stochastic is below 20, and what we have in the chart here is a ranging market, we need to ensure price breaks out from this resistance, okay, before we buy. That will be the confirmation. Okay, so don't just jump in and start buying because RSI has crossed level 20. No. You wait for price to break a resistance level before you buy. So that's my take on Euro USD. Okay, I would wait for price to break this high. Okay, I would wait for price to break this high. I have to use that stochastic indicator for those of you who find it difficult to identify upwards and oversold. You can make it RSI indicator, because I'm experienced just by looking at the chart. I can tell you that the market or asset is overbought or oversold. I've been doing this for years, so I don't need the indicator to tell me if the market is overbought or oversold. Just by looking at the candlesticks pattern, I can tell. Okay, so for those of you who are new to trading and you don't know how to identify overbought or oversold, you can make use of the stochastic indicator. You can use the stochastic indicator when the market is trading below 20. When the stochastic indicator crosses level 20, you know it's oversold. When it crosses level 80, you know it's overbought. Okay, so when the stochastic indicator crosses level 80, you don't jump in as asset. You need to ensure that a bearish reversal pattern forms on the chart. A bearish reversal pattern must form on the chart, because sometimes the stochastic indicator will cross level 80, but on the chart, what you will still be seeing are bearish candles. What we're printing on the chart are bearish candles. I'm sorry, yeah, bullish candle, bullish candle, bullish candle. RSI or stochastic has crossed level 80, but on the chart, you are still seeing bullish candle, strong bullish candle, strong bullish candle. You can execute a sell trade. You have to wait for the bearish reversal pattern to form on the chart before you execute a sell trade. I hope that is clear. I hope that is clear. So that's my take on Euro USD. Look for a buy above the resistance level. And if you are buying from this resistance level, your stop loss should be this low. Okay, your stop loss should be this low. So let's assume a candle close at this price. You decide to buy, you should set your stop loss at this low. Okay, your stop loss should be this. This is about 73 pips. So this market risk now will determine the lot size you would apply on the trade. It's the market risk that will determine the lot size you would apply on the trade. So to get the lot size to account, you divide the market risk by your capital risk. Capital risk by market risk, then you multiply it by 0.1. That's how you get the lot size to apply on the trade. The lot size on the trade should be capital risk divide the market risk. Okay, capital risk divide the market risk multiplied by 0.1. That gives you the lot size. I hope that is clear. I hope that is clear. Okay, so that's how you get the lot size to apply on a trade. The market risk determines the lot size you would apply on the trade. I hope that is clear. Any question on that? Any question on that? Okay, so let's move to the next pair. Which other pair do you want us to must look at? Let's look at gold. Gold. Yeah. So for some weeks now, I think gold has been bearish, strongly bearish. For those of you who sold gold, I know you would have made so much profit on gold. Those of you who sold gold, congratulations. I'm going to drop my account details so that you send me my share. Those of you who sold gold, I know you are in massive profit. Congratulations. Okay, gold has been strongly bearish. It's strongly bearish. Can you guys hear me? Can you guys? Are you still here? Are you still here? Can you hear me? Gold has been bearish for the past 3 weeks. Yeah, gold has been bearish. You can see before price drop, the bearish reversal pattern formed. You can see before the price collapsed. You can see the base was a good indecision candle. And the candle that the week that followed closed as a bearish candle. This is a strong confirmation. So you can see why last week was strongly bearish. Technically, we had a pattern indicating change in trend from bullish to bearish. You can see that was why last week gold was strongly bearish. Strongly bearish. Well, the previous week I told you guys my expectation on gold was to buy. That was my expectation on gold. So I didn't see the opportunity to buy last week. So I didn't trade gold because the opportunity to buy wasn't there. It was strongly bearish. So I didn't buy. You can see I didn't buy. I took just one trade last week on GbpUsd. Okay, so that is it for gold. Okay, that is for gold. So this week, what is my expectation on gold? Gold has been selling for some time, and I don't think this will be the right time to sell gold. Okay, if I want to sell gold, I would wait for price. There has to be a retracement before I would look for sell. But selling from the current market price, for me, it is too expensive. It is too risky. It is too risky. I cannot sell gold from this price and set my stop loss here. That risk is too high. It is too high. I don't like to take risk above 50 pips. Once the risk is above 50 pips, that trade is not for me. This is about 1,350 pips, 2,350 pips. Even if I apply 0.01 on this and the trade goes against me, that would be a loss of 295 pips. 295 pips. That risk is too high. So if I want to sell gold, I will wait for price to pull back. I will wait for price to pull back. As you can see, the value gap has been created here on the weekly time frame, and there's a possibility for price to pull back. So this is where I would consider selling gold if I want to sell gold. Okay, this is where I will consider selling. So since I'm expecting price to pull back and few days from now, so what should I be looking at for this week? I should be looking for buy opportunity. Since I'm hoping that price will retrace, I should be looking for what? Buy opportunity gold. Okay, I should be looking for buy opportunity on gold. So if you look at gold here, we had a very huge gap here. Can you see this gap here? The gap between the high of this candle and also the low of this candle. You can see last week candle filled that gap. This last week candle filled that gap, and below this gap we also have a resistance which becomes support. You can see it means that if I decide to buy from the current market price, my stop loss must be below this fair value gap. Okay, my stop loss must be below this fair value gap. That's about 216 pips, and that risk is too high. I can't take such risk. Okay, so let's go down to daily. Let's see on the daily. Let's see the pattern that formed after price filled that gap. Let's see the pattern that formed on the daily. Okay, so you can see can you see the pattern we have here? This is a bullish reversal pattern. This is an hammer. After price filled the fair value gap, what do we have here? This, but this is a bearish hammer, so we can't jump into that line. I with me, this is a bearish hammer. The body is bearish, and the next candle that goes Friday candle, you can see it's a spinning bottom, but this is a bearish spinning bottom, so we can't jump in and start buying because the body of these candles are bearish. It is bearish, which indicates that we still have sellers in the market. Before we buy, we need to ensure that there are buyers in the market, so we need to wait for the next daily candle or the next 4-hour candle to close bullish before buy. Also remember, this low here has become an area of liquidity. A lot of traders or impatient traders would have executed buy after the formation of this hammer. And where would they have their stop loss? Their stop loss will be residing at this previous low. And before the institution would execute their trade, the most times we want to clear the liquidity because there are a lot of sell stop order. There are a lot of sell stop order at this point. There are also buy orders residing at this point. So most times we want to clear the liquidity before going bullish. So if you are considering buying gold this week, you should wait for daily candle to close bullish or wait for 4-hour candle to close bullish. And if you are buying above the current market price, stop loss must be below this area. So you should consider the risk first before you execute the trade. Very important. Consider the risk first before you execute the trade. I hope that is clear. So take on gold. I would look for buy opportunities on gold this week. Let's see 4-hour. I'm sure on 4-hour we'll be able to identify a bullish. You can see on 4-hour price has been in a range. On 4-hour before the close of the market on Friday, price went into a range. You can see. So identify the range, wait for breakout. If you want to buy, wait for breakout from the resistance. This is not a good price to sell gold. This is not a good price to sell gold. Okay, this is not a good price to sell gold. So you should wait for price 4 hours to close above this resistance before you go bullish on gold. That's my take on gold. That's my take on gold. Okay. What was wrong with the background music? Any issues with the background music? Is it too loud? Is the volume too loud? Anything wrong with the background sound? No. How is the sound? How is the sound? Is everything okay now? Is everything okay now? I hope you all can hear me. Can you still hear? Are you still here? Can you hear me? Can you hear me? Can you hear me? Can you all hear me? Can you all hear me? So that's my take on gold. Okay, how keeping buying gold above this resistance? A 4-hour or daily candle closes above this resistance level, I will go bullish on gold. I'll go bullish on gold. I believe you can still hear me. Can you still hear me? Can you still hear me? I believe you can still hear me. Okay, which other pair should we look at? Okay, let's look at USD card. I want to believe you can hear me. Let's look at USD card. So we'll start with the weekly. So on the weekly card here, if you're in the mastermind group and you want to come online, I sent you a link to join the live stream. Okay, I sent you a link, custom link for those of you in the mastermind. If you want to come up, have questions you want to ask, you can use that link I dropped on the WhatsApp group. Okay. Okay, so let's look at this is the weekly. What's it called? USD card was strongly bullish last week. It was strongly bullish last week, and I think the bullish move that we experienced last week for the past week was to clear the liquidity starting at these previous highs. These previous highs. I think that is the reason for these bullish moves. These bullish moves. I think the essence was to clear liquidity residing at these previous highs, and that they have achieved. That has been accomplished. So what should we look out for? Look out for a bearish reversal pattern to form before you sell. Before you sell USD card, wait for a bearish reversal pattern to form before you sell. Okay, as you can see, the weekly is still strongly bullish. Let's go down to the daily. Daily also, as you can see, is still strongly bullish. And if you go down to 4-hour also, 4-hour also is still strongly bullish. So you can see the reason you can't you can't sell, what's it called? You can't sell USD card. Because the pattern on the weekly, the daily is still strongly bullish. Jumping and start buying USD card from the current market price. This is where the price started going up. This is where it started going up. You can see we had an engulfing pattern here. So you have the opportunity to buy after the formation of this engulfing candle. If you didn't buy from this point, price went up, pulled back. You had another opportunity to buy from this point. So this is been the second entry for USD card buy. First entry, second entry. If you miss this opportunity, this was another opportunity. So if you miss this opportunity, probably you could have taken an opportunity here. This has been another opportunity after this pullback, after this breakout, you could have entered back. So you missed the first opportunity, second opportunity, third opportunity. So why would you want to buy from the current market price? That would be a good investment. The only thing that will make you buy from the current market price is FOMO. So if you buy from the current market price, where do you want to set your stop loss? So you set your stop loss to go to the market price, then go for your stop loss. That's why most people complain that the I execute my trade, the market goes against me and hits my stop loss. That's because you change the trend very late. It's very important that you catch the trend at its early phase, and that will help minimize your losses, maximize profit. Most traders will jump in when the market has already moved far from where they ought to have entered the trade, and before the price pulls back and hits your stop loss becomes a liquidity. So you cannot be buying from the current market price. The price has already gone far from where you want to have entered the trade. So if you want to buy, if you insist that you want to buy, you should wait for price to pull back. Wait for price to pull back. At least I should do 50% replacement of this bullish move. It should pull back at least 50%. If you want to risk buying, price should pull back 50% before you buy. Okay? But buying at the current market price, buying USD card, for me, it's very risky. It's very risky. Okay. Which other pair do you want us to look at? Which other pair? Let me know in the comment section. Is there any other pair you want us to look at? Comment section. Okay, let's look at JPY. Let's look at JPY pairs. Let's look at GbpJpy. GbpJpy. So let's start with the weekly. Okay, so as you can see, the pattern we have here is a bearish reversal pattern. This is a bearish reversal pattern on the weekly time frame. Okay, it's a bearish reversal pattern. We had an angry man, shooting star. Okay, bearish angry man. You can see that's the reason last week was bearish. You can see that's the reason last week was strongly bearish. You can see that. So this is a bearish reversal pattern. Going by what we have on weekly, GbpJpy is bearish. Okay, going by the pattern we have on the weekly time frame, GbpJpy is bearish. But let's go down to daily. Let's see the pattern we have on the daily and 4-hour time frame. Okay, let's see. So this is what we have on the daily time frame. It's still strongly bearish also. Daily time frame is still bearish, Okay, let's go to 4-hour. Wow, so you can see what we have on 4-hour. I think it's updated. Let me confirm, let me be sure. Okay, this was last candle. This is a doji. This is a doji. So with what we have on 4-hour, there's a high probability GJ is going to pull back. Okay, we had a doji candle. Okay, and this doji candle formed after a fair gap got filled. It formed after this fair value gap here got filled. Can you see that? The doji candle formed after the fair value gap got filled. And see, so on 4-hour, this is a buy setup on. So it's likely GJ is going to pull back. As you can see, it has created a fair value gap here. So price is likely going to come fill the fair value gap for sale. That's my take on GbpJpy. That's my take on GbpJpy. This is what a doji. Now, after the formation of this doji on 4-hour, let's go down to 1-hour and 15 minutes time frame. Let's see the pattern on those time frame. So you can see the pattern on this is 1-hour time frame. This is a bullish reversal pattern, right? We had this inverted hammer, and we had a doji. You can see this is an inverted hammer, and the next candle closed strongly bullish. You can see now a lot of retail traders. This low is an area of liquidity. This low and also this low is an area of liquidity. Okay, so they might want to go for these lows before going bullish, because there are a lot of stop losses residing at this previous lows. So they now want to clear the liquidity residing at these lows before going bullish. So if you are considering buying GJ, the current market price, stop loss should be several pips below this low, 20 pips below this low, because they might come for this low. So you don't want to set your stop loss at this low. Okay, so you want to set it several pips below this low. Okay, now after the formation of this on 15 minutes time frame, if they don't go for that liquidity, probably an imbalance has been created on 15 minutes time frame. So you want to wait for price to fill the imbalance. Okay, on 15 minutes time, 5 minutes time. Okay, so let's go down to 5 minutes. The fair value gap was created. Okay, so this is the fair value gap on 5 minutes time frame. So it's either they come back to fill this fair value gap, or they come back to clear the liquidity. So if you are considering buying GJ, you wait for price to either pull back to this fair value gap. Now, if this candle closes below this fair value gap, it means they are coming for this liquidity. They are coming to play the liquidity side now at lows. Okay, so that's where you should look at. This is where you should be considering buying. But if a 4-hour candle breaks out from this fair value gap, then they are coming for this low. Okay, so your stop loss should be several pips below this low. But patiently wait, please. Patiently wait for price to pull back to the before you buy, or wait for this liquidity to be cleared. Don't buy from the current market price. That is my advice, GJ. Don't buy from the current market price. Wait for price to pull back to that is value gap, or wait for price to clear liquidity selling at this previous low before you buy GJ this week. I hope that is clear. I hope that is clear. Do you have any question? Any question? Any question? Any question? Any question? Any question? Those of you who are new to trading, was it not last week? Last week I had a session, and in that session I taught you guys how to use candlestick to trend is coming to an end, and when the trend is about to change from bearish to bullish or bullish to bearish using candlestick pattern. And in that session we looked at 3 candlestick patterns or 4 candlestick patterns. I shared how you can use the spinning bottom, spinning top, how you can use doji, and also I think hammer. We also looked at hammer. I think those are the 3 candlestick pattern that I shared. I taught them in that class. Okay, so if you've not watched the video is on my channel. It's on my channel. Go to the playlist. You will see the candlestick strategy. Okay, and that will be part 1. The part 2 will be available this week. Okay, it will be available this week. Probably will be having the class on Tuesday. Okay, I'm going to drop the link on the various WhatsApp groups and Telegram group. Okay, so if you want to participate live, fine. If you're not available, they will be available. Okay, so next year, like I told you guys, be an interesting year. What I'm doing with what I'm doing now and the end of this year is to teach you the strategies that you can use to make profits consistently in the market in 2025. 2025 is going to be an interesting year for Forex traders. You don't want to be left out of this great opportunity, that will be available to traders in 2025. Okay, so I just want to implore you guys to keep showing up for the classes, watch the strategy videos. Okay, we're working together, working with you guys next time. For those who are serious, we want to profit consistently in the market. Next year, we're going to be working together, like I said, for serious people. A lot of people are not serious. They are not taking their business serious. I don't work with such people who are not passionate about business. I am not interested in working with such people. I'm interested in people who are ready to make money next year. I'm ready to work with those people. So I'll be creating a Telegram group for those people. Okay, creating a Telegram for those who are serious. Okay, and you have to have a life account funded with Cabana Capitals. Funded your life account at least with a minimum of $100. You'll be added to the group. Okay, you'll be added to the group. We'll be coming on maybe 3 times a week. Every day we'll be analyzing the market together, things together. Okay, we'll go together. Okay, there are job opportunities for traders. You'll be informed. Okay, any opportunity that is available that I believe you as a trader will benefit from, I will share with those who will be in that group. Okay, any question? If you have any question, let me know in the comments. Take your trading business serious. Take it serious. Any question? That GG. Okay, let's look at USDPY before we end tonight's session. If there are no questions, let's just look at USDPY before we end tonight's session. So we'll start with the weekly time. What pattern do we have on the weekly time frame? What pattern do we have on the weekly time frame? I don't want this class to be more than 1 hour, so it's 53 minutes so far. So in the next 5 minutes, we should be done. With this class. Okay, so look at what we have here on UJ. You can see this is like a shooting star. This looks like a shooting star on the daily time. So it's likely UJ is going to be bearish this week. Okay, this is a bullish shooting star. So let's go down to daily. This is a bearish reversal pattern on. So on the daily, you can see what we have here. This is an engulfing pattern, and that engulfing pattern formed after this see the fair value gap here. After this fair value gap got filled, you can see the pattern that formed after this fair value gap got filled. It's an engulfing pattern indicating change the trend from bullish to bearish. But my fear is this fair value gap. We still have the fair value gap here that is yet to be filled. So we now also want to come and fill this fair value gap. Okay. The fact that the pattern that formed after this fair value gap got filled is a bearish reversal pattern. Okay, it's a good confirmation. It's enough reason I want to take the risk selling. Okay, but let's see. Let's go to 4 hour. So on 4 hour, you can see the pattern we had on 4 hours. Can you see this? This is an hammer. This is an hammer, and that hammer formed. We had the fair value gap here. You can see we had the fair value gap here on 4 hour time frame. After that gap got filled, it's the pattern that formed. So you can see that the pattern we have here is similar to what we saw on G. Can you see that the pattern we have here on USD/JPY is similar to what we have on GJ? So as you can see, a fair value gap was put here on the 4 hour time frame. So there's a high probability that it's going to pull back to fill this fair value gap here. So my bias on USD/JPY this week will be buy. I want to see price fill this gap. So for those of you who are considering selling USD/JPY, wait. That's my advice. Wait for price to come fill this fair value gap before you sell. Okay, this is where I'll be considering USD/JPY, but it is right now based on how 4 hour candle closed on last 4 hour candle. You can see this is a valid hammer, bullish hammer. This is a buy sector. Now let's go down to 1 hour. So what do we have on 1 hour? Okay, so this is what we had on 1 hour. Let's go to 15 minutes where the value gap was created after the formation of that hammer. So you can see we had a value gap here. So they might want to come and fill this gap before going bullish. Okay, so now I wait for them to push price, fill this value gap before going bullish. Okay, so the candlestick pattern that forms after this gap gets filled will determine if that will be the right time to buy, right? So if a bullish pattern forms after this value gap gets filled, then you could go bullish. But if a 4 hour candle breaks out before the candle closes below this value gap, then it's possible they will be coming for the liquidity residing at this low. So that is my take on USD/JPY. And that will be all for tonight's session. Any question? Do you have any question? Let me know in the comments section. Any question? Let me know if you have any question. Mr. Elijah, are you still with us? Mr. Gozu, Mr. Okoro, Olivia, can you hear me? Do you have any question? Do you have any question? Let me know. If you are yet to open an account with Cabana Capitals, please do. They are currently offering 35% tradable bonus on every deposit you make. So you want to take advantage of that promo. You make a deposit of say $500, you get $150. Yeah, that's 30%. You get $150 tradable bonus. You make a deposit of 200. 30% of 200, that is $60 tradable bonus. So you want to take advantage of that offer. Okay, now that is available, take advantage of it. And like I said, for those of you who want to take your trading career to the next level next year, I would like to work with you. Okay, and for me to work with you, you have to have an account with Cabana Capitals. Also, you have to be serious. You have to be serious. Most of you are not serious. I come from classes, you don't show up at classes. I don't want to work with such people. I see those people, they are profitable, they are making money. I want to work with people who are struggling in trading. They are not profitable. Who I want to work with. Those who really want to make money from trading. Okay, so next year we get to know more about before the end years. Before the year ends, I'll give you guys more updates on how the group will run. Okay, so that will be all for this session. I believe you guys got so much value. If you're here to like the stream, Please do. Okay, someone is asking a question. Since the weekly candle goes bearish, can we wait for a weekly bullish setup as well? Yes, you can swing that. Since the weekly candle goes bearish, if you want to buy, you have to wait for this week candle to close bearish. That's for swing traders. Okay, you have to wait for this week candle. Which of the pair are you referring to, Mr. Okoro? Which of the pair? Which of the pair are you referring to? Which of the pair? Let me know. Which of the pair? Since the weekly candle, okay, that is I think you're referring to. This is not that question. I'm not sure it's for weekly. Which of the pair are you referring to, Mr. Okoro? Which of the pair? Which of the pair? Which of the pair? Which of the pair? Okay, so no, it's 1 hour, so I would have to end this stream. I really appreciate you guys for your participation. I wish you all profitable trading week. Please stick to your trading plan. Stick to your trading plan and ensure that you apply proper risk and money management. Apply proper risk and money management. Apply stop loss on all your trade. Take risk you are comfortable with. Don't over leverage. Okay, this market is going nowhere. The forex market is not going to go tomorrow. Okay, it is here. It is here. So don't be in a rush. Don't be in a rush. The market is not a Ponzi market. Okay, it's not a Ponzi market. I'll be here today and tomorrow is gone. Forex trading has been around for years. It's been around for years. Since the days of trade of back, since the days of trade for barter trade, the market has been here. So it's not going to close tomorrow. The market will only close. A few minutes, guys. The market would only close when international trade stops. That is when the forex market will cease to exist. When testing goods and services between two countries stops, that is when the forex market will cease to exist. And I don't think that will happen. I don't think in years to come. Countries must exchange goods and services. They must. That is why I pick my tent on forex trading. I haven't tried online businesses. Most of the online businesses, year today, tomorrow, there are no more. But the forex has been here. It has been the same yesterday, today, forever. That's why I decided to push my tent here. Don't get involved in a business that today is here, tomorrow is no more. But now I have to start looking for another business to do. No. So, EU and GbpUsd and GbpUsd. I've already shared my analysis, those specs. So you know what you should look at for. If the weekly closes bearish, okay, I told you what you should look at for with the leadership as important to form on a daily or 4-hour time frame before you buy. Okay, for leadership as important to form. Okay, as you can see, last Friday candle was strongly bearish. You cannot buy now. You cannot buy. There's no confirmation to buy on the chart. You trade what we see on the chart. If it's not on the chart, then you can't execute the trade. So what we are still seeing here is bearish, but you cannot sell. Why would you sell from the current market price? You have to wait for price to pull back. Okay, you have to wait for price to pull back. So some people would say the trend is bearish on GbpUsd. In a bearish trend, the higher time frame, there will still be retracement, right? There will still be retracement on the lower time frame. So for those of us who are considering, some people might see it as pullback trade. It could also be a change in trend trade. Okay, so but some people will see it as bearish, but this won't be the right time to sell. If the trend is bearish, is this the right time to sell? Will this be a good price to sell? No. So we need to see a pattern. So let's say we want to take considering buying this week, we want to take advantage of the pullback before we sell. And we'll be selling when price is the premium area. This will be the premium area. Right now, price discount is oversold. So we should be looking for buying opportunity. Those who sold from this point would want to buy, right? They want to close their trade. They want to take profit out of the market. Those who want to trend at steady pace, unless they are greedy, okay? The smart one will want to close their trade to take profit. And as they keep closing their trade, what happens? The supply decreases, demand increases, and price will go up. All right, guys. That will be all for tonight. Next session, and most likely will be coming every day, most likely. I'll come on live tomorrow. I'll be live on Tuesday. Like I told you guys, anything we have a major, we'll come on live during New York session. Come on to share our thoughts, our expectations on most of the instruments with you guys. Okay, so thank you. Once more, I want to appreciate your participation. I want to believe you like the stream, and if this is your first time participating, please subscribe to the channel so that anytime I come on live, you get informed by YouTube. Okay, you get notified by YouTube. So it's important that you subscribe to the channel. I wish you all a wonderful night.